Hello, hi, welcome back. In this video, I'm going to solve one question on bank reconciliation statements. So we are going to do it step by step. Okay. This question is from your tutorial set, exercise 11.8. Let me read the question first. The following information relates to the cash position of Katie Fraser, loan broker, and the first information is about cash at bank. This is the record kept by Katie Fraser. So the balance as at 30th June 2019 was 45,451, whereas the record kept by the bank, as stated in the bank statement, was 47,512. Obviously, you can see this amount is not tally. On 30th June, you received a check amounted 1,820, but it not yet deposited. Followed by check issued but not presented, you have 3,468. We have another check worth 312 was returned and marked dishonored. This check was received from a new customer named J. Sims. We also have a deposit of 750 made by L. Richard, but was incorrectly credited to the bank accounts of Katie Fraser. This money should not be credited to our accounts. It belongs to other parties. Next one, the bank statement shows that the bank has charged the business account with fee and charges of $25. So in this example, item number 4, 5, and 6 have not yet been entered in the journal. So we need to prepare or calculate the adjusted cash book. So you are required to prepare a bank reconciliation statement as at 30th June 2019, assuming that item number 4, 5, and 6 are already recorded in the journal, in the cash journal. So to solve this problem, we first need to understand the current situations, the current problems. In our cash at bank account balance, this is kept by us. The record is kept by us. This is our record. Our cash balance is 45,451. This is our cash balance, 45,451, and it's debit. Debit means our assets. However, in the bank statement sent by the bank, our balance of cash was 47,512, and you can see it's under credit balance. So we can see there's a different here, different in the amount as well as different in the side of accounts. In our context, our cash is our assets. Our cash is our assets. So the amount is 45,451. However, in the bank context, this cash is not belong to them. This cash is ours. So they put as the credit, mean the cash belong to the depositor, mean to our company. So that's why they have a credit balance. But the balance is different, 47,512. So how we are going to do this? First, we need to prepare the bank reconciliation statement. Start with the title, put a title of the business or title of the individual there, Katie Fraser, loan broker, And then the document is bank reconciliation statement as at 30th June 2019. So we start with balance as per bank statement, credit. So what is the balance? Balance is 47512. So you put the amount here 47512. And then we're going to do some adjustment here, plus and minus. And at the end of the day, we're going to have a balance as per cash at the bank account. Cash at the bank account. So this is our record. So we should have a good equal balance, not equal balance. We should have a balance tally with our records. Since there are several adjustments that have not been made, so we need to prepare the adjustment first. So I'm preparing here the notes working. There is cash at bank balance. So this is our record. This is our record. Okay. The balance is 45451. 45451. Okay. So then we look at this adjustment. On 30th June, receipt amounting 1,820 have not been deposited. Mean we receive in our business, we have recorded this receipt of cash 1820. This is correct. However, we did not deposit the amount to the bank yet. So that's why we can say our bank's record is understated. So in our bank reconciliation statement, we need to add 1,820. Why? Because in the business record, we already add $1820. However, in the bank record, they did not have that record. So this is the reason why our bank record is understated. So we make a note there. The difference come from deposit not credited or uncredited deposit. So we put here at 1820. I repeat again, in our record, we already recorded 1820 receipt that we received on 30th June. However, we are not able to send the check to the bank immediately. Maybe we send it next week. So in the bank record, they don't have this record. That's why our bank record was understated. So we put here, we need to make some note there. Add deposit not credited or uncredited check, the amount is plus 1820. So how are we going to do that? Very easy. So we put here add deposit not credited and the amount is 1820. So we are adjusting the balance. We are identifying what are the causes, what are the reasons, what are the factors that cause differences between our bank statement record and our cash book record. The next example is check issued but not presented, total $3,468. So in our record, we already signed the check, we issue the check post to our customer, so we minus our accounts. So this is the correct adjustment, correct entries. For the bank, the customer might not receive the check yet. So in our bank did not deduct the 3,468 from our account. So I can say that our bank now is overstated. So how we should do this? We put a note there. That is, we are going to minus unpresented check or payment not debited. The bank record is, I can say here, overstated because bank did not deduct 3,468. So what we should do is we put an additional note. Another reason is we have unpresented check, so we're going to minus 3486. We're going to minus 3468. So in your bank reconciliation statement, another reason is the bank has not deducted the check 3,468. So this is for the second adjustment. Okay. The third adjustment, a check was 312 was returned marked dishonored. This check had been received from JSIM, a new customer. Previously, we added 312 in our accounts. However, the bank say this check is dishonored check or return check. What I mean is they don't have sufficient balance to pay you. So this is wrong. Nothing happened here in the bank records. The bank record is correct. So what should I do now? My action, I should do no adjustment in our bank reconciliation statement because it's nothing to do with the bank, but we need to correct our cash balance. So previously we mistakenly added 312. Now I have to deduct 312 from my cash book. So it's not a bank reconciliation statement. No adjustment in the bank reconciliation statement. We need to adjust our cash balance. So how I'm going to do that? Our cash balance before this is 45451. Now I'm going to minus another 312 which have been added before this. So minus 312. The next adjustment is a 750 deposit made by Al Richard was incorrectly credited to the bank account of Kathy Fraser. We don't know who's Al Richard, but the bank, that is their money, but the bank mistakenly add to our accounts. So in our record, everything is perfect, no issue, no problem. But in terms of our bank record, we can see that bank mistakenly add our account. So that's why we can say that our accounts now overstated. The balance was overstated. So what we need to do now is we need to adjust to report that our bank reconciliation statement has added 750 by mistake. So we need to minus our stated by 750. So we need to minus 750. So I put here additional information. Deposit incorrectly credited 750. That is the reason why our bank statement balance overstated 750. Okay, the next one is the bank statement shows that the bank has charged the business account with fee and charges of $25. So the bank has deducted our account balance, our account with $25. So this is the correct one, but we did not put any record. So we need to adjust our cash balance by $25. So adjust the cash balance. We're going to deduct our cash balance by $25. Okay, the record in the bank is correct. So we put additional working here for our cash balance. That is bank fee minus 25. Minus 25. Okay. So we have completed the question. So let us total up. Our balance, original balance is 47512. Deposit not credited, uncredited 1820. So when you add up this, you have 49332, and then minus unpresented check 45864, and deposit incorrectly credited, you minus 750. So after adding and minus, uh, this adjustment, so we'll get a new balance of cash book that is 45514. This is the correct balance of our cash book, should be the correct balance of our cash book. Let us check our cash book. Originally we have 45451, then we less 25, less another 312, so the total is 317, then 45451 minus 337. This gives us our new or our adjusted cash balance, our adjusted cash balance, which is equal to the bank reconciliation statement. So from this report, it helps the users of financial statement, most likely the managers and employee, to determine what are the causes of differences in between these two records. So they know that from here we have five causes of differences. Number one is uncredited check. This is number one. Number two, we have unpresented check. Number three is error made by the bank. Number four is bank fees not being recorded by us. Another one is the dishonored check. So we have five reasons. So we identify why our balance here is different from what we have in our record. So the bank reconciliation statement help users to identify what are the reasons for differences in the cash book and also the bank statement. So that's it for today. Thank you so much for watching the video. Bye bye.